March 2024 option trade alerts. You can visit beststockstrategy.com/memberships and enroll in the 7-day trial. It's only $19. So I actually skipped February for the first time in, I don't know, 3 to 4 years. And the reason for that is I switched phones and then I tried to transfer all the chats, but it didn't work and it actually caused a little bit of an issue. And then additionally, when I had to revert back to the last backup, it didn't transfer over any of the photos or any of the videos. And I actually missed 6 days as well. So this is from the old phone. You can see there's no photos. And then it jumped to February 26th, which is with the new phone. So unfortunately, we have to skip over February. But there are some good trades that you can see, like this ratio spread, etc. But all right, let's start with March for the option trade alerts. Here we traded SPX. We picked up $100, S&P up 41, VIX down 2%, and VVIX up slightly. GLD up almost 2%. Our NVIDIA trade from a few weeks ago is showing a nice profit. We're showing around a $6,500 profit in NVIDIA. March 4th, new opening trade, B plus grade, filled at 66 cents. IWM, new opening trade, B plus grade. You can turn the short puts into spreads by selling a 160 and then buying a lower price put option that will yield a small credit for the entire structure. Long-term play to the upside for Boeing. My rationale is that I wouldn't mind owning Boeing around 100. So here we picked up a credit of $103. Then you can read the messages that I sent. SPX picked up $50. S&P down 6. VIX up almost 3% and VVIX up 2.2%. March 5th, S&P down 24. Slight adjustment for Google, rolled it down to a strike where I wouldn't mind taking ownership. It's so funny how quickly stocks turn around because here I rolled Google down to 115 and currently just a month later, Google is performing exceptionally well. The hedges are kicking in, so we are up around $6,000 that day. For the SPX Strangle, we picked up $190, S&P down 52, VIX up 7.2%, and VVIX up 5.7%. At one point, the S&P was down 74, but then it rallied. Rolled the calls up by $5. This was a very aggressive roll and likely not necessary. Our NVIDIA position is showing a $7,000 gain. For every debit call spread, again, don't be shy in taking those gains if you so desire. Small new opening trade, B plus grade. The goal is to obtain Apple at a discount if the market falls. Boeing new opening trade, B plus grade, small opening position. Picked up $110. S&P up 26, volatility mixed. March 7th, solid opening, S&P up around 36. Picked up $125. So NVIDIA was showing a $14,000 gain. On a net basis, the NVIDIA spread is showing a $7,000 gain. I'll likely close it out if I sense that the market direction will change. S&P up 53, volatility down slightly. I thought the volatility would be down more for a 50-point move. March 8th, S&P up 20. NVIDIA, we closed it out for around a $6,000 profit. Then I bought it back. The market has stabilized. I may have been a bit early, but then I closed it out again, actually. I feel more comfortable waiting until Monday. I don't usually do that, but I just felt more comfortable. For SPX, picked up $155, S&P down 33, VIX up 2%, and VVIX up 5.4%. March 11th, small starter position for Meta, new opening trade, B plus grade. Boeing, Last trade for the morning, this is an optional adjustment, although this actually turned out to be pretty wise and pretty smart. Meta, one final adjustment, rolled it down by $5. If the market continues to fall, then we'll use debit ratio spreads to capture some of the downside move. Picked up $585. That's a lot of premium. S&P down around 6. VIX up 3.3%. The price action today was slightly strange. On the one hand, the market was barely down and showed strong price action after being down around $25 earlier in the day. However, volatility was up a lot, which is a red flag. Even so, price action is more important than volatility, so overall I would say that today was bullish. March 12th, solid opening. Bought back 2 of the calls just in case. Closed out the other 2. Rolled up the 160 to 165. Financed it by selling calls. BA is a solid company. The trend is down though. As a spread, you can sell the 225 or 230 and buy the leg that's $15 higher to finance the adjustment. SPX, new opening trade. S&P up 57, VIX down 9%, and VVIX down 5.9%. March 13th, solid opening. Picked up $110 for SPX. S&P down 10. There wasn't much movement today. March 14th, S&P down 33, but volatility is up a lot. Picked up $315. S&P down 15, VIX up almost 5%. The S&P was down over 40 at one point, and VIX was up over 10%. That's definitely something that I've noticed, where even if the market during the day tends to sell off, and there have been days, I think one day, the market was down over 100 points, and there was another day where it was down around 77. During all those times, the market has rallied. I think during the day when the market was down over 100, it closed down around 78 or 72. And then during other times, the price action in the afternoon heading towards the close has been very bullish. So I would definitely watch that because it might be an indicator about a changing trend when when the price action heading into the close is actually bearish as opposed to being bullish. March 15th, S&P down 20, sold new calls, and then closed out the position. Closed out the BA position and financed the majority of it by selling calls. Solid day, volatility up over 7%. Closed out GLD for a profit. Picked up $80, S&P down 33, VIX even, and VVIX up almost 4%. March 18th, small adjustment to Google, trimming some of the upside risk. Closed out one more. New opening trade, picked up $105, S&P up 32. Volatility was even, or rather the VIX was even, and VVIX was down around 6%. March 19th, the S&P down 12. New opening trade, B plus grade in Blackstone. Picked up $260 of credit. S&P up 29, volatility down over 3%. Today's price action was very, very strong. March 20th. Then I said tomorrow will likely be stable until the Fed statement at 2 p.m., 2 hours prior to the market closing. March 20th, not much action. Picked up $160 for the SPX Strangle, S&P up 46. The bull market is firmly back. VIX is back to around the 13 level. March 21st, solid opening. This might be the 4th straight bullish day. New opening trade in Apple, B plus grade. You can try to place this all on one ticket for a credit of $45 to $55. New opening trade in SPX picked up $100. S&P up 17. Volatility, not much movement. March 22nd, S&P is relatively unchanged. Closing trade. Picked up $75. S&P down 7, not much change in volatility. March 25th, solid opening, S&P down 12, VIX up 2%. Small new opening position, B plus grade. The goal is to own the stock and then participate in the upside. SPX picked up $60. S&P down 16. Volatility up slightly. March 26th, S&P up around 11. Closing trade for Google. Picked up $75. S&P down around 15. Tesla down around 3%. March 27th, S&P up 23, volatility is mixed. Nvidia is showing a little weakness. Picked up $60, S&P up 45, volatility was down. Then March 28th, S&P up slightly. Small new opening trade for GLD, selling the 215. Picked up $90. Then last Friday, the market was closed. And then Monday, I think Monday was April 1st. But let me just go over it just in case. So here we closed out the PanW trade, which I think I showed in late February. It just wasn't a good trade, and PanW is not on my watch list. I really don't know why I traded it. The reason I did was that the implied volatility was very high. But even so, we closed it out, and we financed it by selling calls. Here you can see I closed out the other one by selling calls. S&P down 7. New opening trade, ratio spread, and JP Morgan. That's a good trade. I wouldn't mind owning it at around 105. Then I picked up $40 for the SPX, which is very low. But I chose very conservative strike prices, and volatility has been very low. S&P down around 10. VIX up around 5%, and VVIX up 2.5%. And that's about it. You can take the 7-day trial. It's only $19 for 7 days at beststockstrategy.com/memberships.